I think we should all do this. I always say to people, send your first word. I think we should all go watch a video on how to script your own AI agent. It's basically not that difficult.
Times in life when you're super excited about this conversation. But before we get into Binance and crypto and, these amazing subjects, maybe we can just give us a little bit of background about yourself. I mean, we know you come from 20 years of banking, institutional banking, and you've moved to this new world order. But who is Hannes and how did you get here?
Well, Ralph, firstly, thank you for the opportunity. Great to be here. Great to chat to you guys. Getting straight to that point. So I was born and raised in Bloem. I come from an academic family. Dad was a professor in economics. Mum was a librarian. Studied economics, very early interested in banking. Had a great career at HSBC for more than 20 years. HSBC has restructured. You would have seen the press on that. The South African business was shut down. I think at that stage, there was early signs of it. But there was a lot of vectors at that stage in life. We went through COVID. And you just realize there's a lot of things happening to us, a lot of things happening around us. We're all changing. The world's changing. And I got to a point where I think, okay, well, life's about many chapters. This is a great chapter, but I also want to experience some other things. And yeah, I got to the stage where this opportunity came up, and I jumped at it. It seemed to be a good move at the time, and it still is. I'm really enjoying it. As you say, it looks like a big step from one side of the spectrum to the other. But then you also look at it and you go like, what, value is value. Money is money to a certain extent, but the way we interact as humans and the way we interact and transfer value between each other, that kind of stays the same. Whether you use system A or system B, it stays the same, but every system's got its benefits and its disadvantages, and that's always triggered me. So, and I thought, well, at HSBC we were very fortunate. I worked with a guy called Segun Moodley, who headed that payments and cash management system. From nowhere, it was a small team. They won payments and cash management or electronic banking business of the year, and that included all the banks in South Africa. And after that happened, we all sat down and said, guys, this is awesome. What happened? And the common denominator was that they just really cared about their clients. They wouldn't have a call center here or there. They spoke to their clients themselves. That human contact was super important. And that's just why clients voted for them. It's like, these guys care, they make things happen. Now you take that forward into the Binance world. It's the same thing with Binance. It looks slightly different. It's more community-based. I think Web3 and everything Web3 is about communities. And that's something, I'll be honest, I didn't fully understand until I joined. But once you see how these communities move, you understand also where your support base lies. And, our founder was very, very strong on that community element. His partner is still with us in the business. She's very strong on that community element. You've got to look after it. That's where you keep your ear on the ground, is the community will tell you when something goes wrong way before your engineers tell you, way before the press tells you. That your community will tell you if something goes wrong. They will also tell you when something's working really well. So that element for me is also very good. So that's in a nutshell. That's where I come from. That's what I've done for now almost 3 years. I'm thoroughly enjoying it.
So when did you know it was the right time to take the leap, or what were the signs that told you this is the new way?
I started looking at it. As I say, I don't think there's a single eureka moment. Luckily, I'm not someone to jump out of a bath, but there was a couple of moments. Started for me in 2017 when Bitcoin first came into my radar, admittedly late. I'm like, okay, that's interesting. That was so at that stage in South Africa, Luna already existed, and by the way, I still think they do a great job. Binance was formed that year, and I realized that hang on, there's these local exchanges and there's these international exchanges, and it looks a lot like banking. You got international banks like HSBC, you got the local banks like an FNB. But this seems to mesh much more smoothly, almost, I can say. To send money from Luna to Binance was the easiest thing. You push a button and boom, open your app, there it is. I'm like, this will not happen in banking. That thing, Ralph, that grabbed me. Where you understand how the CHAP system works in dollars and how difficult it is to get money through that system and how easy this was. And then you realize, the reason why everybody tells you the dollar system is so difficult because there's a lot of AML and counter-terrorism checks and stuff, but crypto does that too. It all happens in the background, but it happens so much faster. It's one of the first things you get into the business. Okay, guys, I just need to make sure this works. And guys say, yeah, no problem. Here's our screen. Watch how it happens. You're like, this is absolutely fascinating. All those checks obviously happen when a client gets onboarded. And that's actually a fascinating process in itself, using APIs to work with the Department of Home Affairs. All these clients get vetted in the background. I, myself and my compliance officer, Sam Kesey, sign off dozens of these in a month. High-risk clients, what we call politically exposed people, all that stuff happens. We don't make an industry out of it, but it's part of the industry. And you realize, but this is actually so smooth. It's fintech of money. So before that, even when you realize what Bitcoin does and offers, and you realize how well this works, it's truly fascinating.
Yeah, I mean, I wanted to ask you, I suppose your father, as a professor at economics, would have been a good person to engage with about crypto and the future. Is that one of the things you did? Was that a discussion that took place in the house?
He unfortunately passed away in 2017 when I kind of got onto the wagon. I think this would have been quite a thing for him. He would have, I think, being an academic with a lot of academic rigor, he probably would have been quite skeptic of it initially. But I think once you see the network in action, that would have been quite fascinating for him. And I think if he stayed with it, I think he would have enjoyed it.
So when you say network in action, what do you mean by that?
If I look at the network effects of crypto, and this is one of the foundational theoretical concepts of crypto as a technology. Actually, I mentioned earlier to you Metcalfe's law. Metcalfe's law is a telecommunications concept where every time you connect a node to a network, the number of network connections actually multiply. And it's the same with crypto. Crypto is just like a phone network, in that sense. So every time you have a wallet, I have a wallet, and someone else owns a wallet, where there was 2 connections, now there's, what is it now? There's 3, 6, 9. It multiplies, So you look at that. I can't remember the guy's name was obviously Metcalfe, but the way he modeled it out is there's a slow start to it, and then it goes hyperbolic, and then as technology matures, the curve tapers off again. And this is the same thing with all technologies. Now, crypto is not the fastest technology. I think we've now seen that AI is the fastest adopted technology in humankind, but there's interesting intersections between the two as well. So that network effect is very important. Then you have something called the Lindy effect, which is also an engineering term, which is the number of times a network gets tested or attacked, with sometimes from 11 forces, sometimes just by nature, in a sense, to see if this thing can survive. It's basically it's almost a Darwinian principle, can this thing survive? And the more times it survives, the stronger it becomes. I think Bitcoin, there was a very interesting meme the other day saying, I think Bitcoin has been declared dead 53 times. But, it's not dead, So that Lindy effect coupled with Metcalfe's law gives you a very solid theoretical base. And then you need to start looking at, I think, just general macroeconomics, how liquidity cycles work, how money supply work, how crypto correlates to what economists call the M2, the money supply, the second layer of money supply. How those things correlate then becomes really fascinating. And then the cycle starts making real sense. So all of that makes for good trading.
So what would you say is like the biggest misconception that people have around crypto and Bitcoin?
I think, unfortunately, due to in the initial years, the Silk Road network and the use of that to purchase drugs, it wasn't the only thing it was used for. A lot of it was used for that. Now, I've seen a lot of the numbers, and I've seen a lot of the independent data from firms like CoinGlass, etc., where they look at what is truly money laundering, or terrorist financing, etc., as a percentage of total blockchain activity. And it's a small number. It's way less than 1%. I mean, 1% is always, for me, a breakthrough number, on many fronts. But it's way less than 1%. It's obviously difficult to truly capture the right number, but I don't think it differs very much from the traditional fiat world, if not better. And the thing is that with crypto and blockchain, you can track all transactions all you need to do in the end is, in the law enforcement, we work very closely with law enforcement, is then to add an identity to a specific wallet. And that's, I mean, we're going to talk about the regulation stuff as well, but that creates a record, an immutable record. You cannot cancel it to a crypto transaction. You can only do an equal and opposite. So once it's blockchain, it's there, and you can't delete it.
Yeah, one of our business partners, he collects cash in the township economies, and I often think cryptocurrencies would be a great way for them to trade. But then I also think about they use cash to avoid paying taxes. And if what would you say to someone who's running a business or an organization that wants to get into these informal traders? How do you entice them to start using crypto and these sort of technologies?
The tax element is, I look at our country and, we have the broader tax space, but we need to do it in a way where I think it works for everybody. If I look at, straight to your question, if I look at these guys carrying all this cash around, it's just not safe. You walk around with, apparently I've become famous for the phrase, dirty pieces of paper, but it is dirty pieces of paper. And we walk around with these. But anybody can take it. I can, with the right weapon, I can relieve you of your dirty piece of paper, and now it's my dirty piece of paper, and you've lost all your value. That energy, that life energy that you put into your spaza shop or your informal trading organization, that you convert into money, we forget that's what happens. You convert one form of energy into another. It just disappeared, and now you're without, So, yes, there are scams in crypto. Yes, wallets can be hacked, etc. But it's actually remarkably secure within apps like the Binance app, where it's only when people, if someone hijacks you and got a gun to it, then that's a very different situation. But in any other situation, you can actually spread that around. So if you got your phone with the Binance app on it, the Binance wallet on it, and let's say one or two others, you can, on a very basic basis, start diversifying your risk. Put a bit of your money in another exchange, in a DeFi wallet, in a Web3 wallet, and in your Binance wallet. And all of a sudden, someone robs you, you only lose 25%. You don't have everything with you. Or in your house, which is not very secure. Whereas phone security has come a long way. Two-factor authentication has come a long way. And we've also now got anti-phishing codes that we put in. So all of that just makes it more secure. And that's the balance you got to strike. So, do you want to lose all your money, or do you want to pay a little bit of taxes like a lot of us do? I still think that's the right thing. And I think all of that can be absorbed into the economy. So it just makes sense. And I honestly think we're going that way.
Yeah. And how long is it until we get there?
I knew the answer to that question. I suppose none of us would be. I see a migration in South Africa more towards the investment case for crypto. And this is where you got to give the banks kudos. South Africa's got a remarkably well-working and advanced banking system. I said to one of the bank serve individuals at a conference, I'm very impressed with what you guys did with PayShop. Because if you look what PayShop does, that's crypto for rands. It's just a way where two individuals can connect with a phone, and it goes from a Capitec account into an FNB account seamlessly, and they've adapted that system very well. There's still a fiat currency under that, but I think in a country like South Africa, I think it will take longer, but I think eventually it will happen. I think the moment rands start being tokenized at scale, it's already happened, but the moment you get a stable coin in rand and that can be transmitted freely or emitted freely, I think that's when the game starts changing. But you need that scaling moment where something will change it for us. When you love him or loathe him, Michael Saylor makes a couple of good points. He's the founder of Strategy, who's now become a Bitcoin treasury. He says he had a couple of very set beliefs in life until COVID came along. And he says, COVID is like a form of war. All of a sudden, you have to reconsider your belief structure, your things you hold so dearly, and you realize afterwards that a lot of the things we hold on, we never really needed. And a lot of the things we now have makes life so much easier for us. And I think we need one or two of those moments, hopefully not too painful, but we need a couple of those moments in our lives to move things forward. And I think once you get to that point, I think you'll need one or two of those moments before it really starts scaling up.
Yeah, I mean, I don't even know the sort of size of the market in South Africa, but I often think about, I often get Ubers and I ask people where they're from, and quite often it's someone from Zim. And I feel, I don't know I don't want to say feel sorry for them, but I feel like, shucks, they had the Zimzora and they work with the dollar, and whatever they're earning today, it can be worth 10 or 20% or whatever the next day. And I see crypto and I see the blockchain as an opportunity, certainly for those sorts of countries. And that's where possibly I see the breakthrough is helping, countries with these stable economies, essentially.
And it's, if you look at what stablecoins, I mean, what we're really getting towards is the stablecoin discussion. And it's one, obviously, we support very strongly. It's not only about trading Bitcoin and coins and everything. There always needs to be a trading pair. And that's where the stablecoins came from. It was a trading pair that was just easier to trade. So let me collateralize your dollar. Let him mint a coin that's easier for you to trade your Bitcoin on. And all of a sudden, people realize, hang on, we can just trade the stablecoins. Nothing wrong with that. It's fully collateralized. Let's take the two big ones, Circle and Tether. They're fully collateralized. They publish their collateral reports. The two of them combined got to a point where we know about the US and the US's debt issues. But if you were to take those two as purchases of US debt out of the system, we have a problem. So they basically underpin a big part of that engine, but it's fully collateralized. So there's a small part of cash, and then they hold US treasuries, which is, anybody who's ever studied economics knows that's how money gets generated anyway. Now you take these stable coins, basically you have it's not a dollar, but it's a quasi-dollar. Let's call it a quasi-dollar. And now you have someone in, let's say, Ghana, who is a cocoa farmer who needs to get paid, but also needs to pay people. Cocoa is a global commodity, so it gets traded in dollars. So you can get people to trade that in stable coins, and you can get the farmer then to buy whatever. Let's say he or she needs to buy fuel, they need to buy whatever agri supplies they need, but they can only get that on an imported basis. All of a sudden, it becomes a dollarized economy. I don't think I think it accelerates the Ghanaian economy. I don't think it hurts it. And I think that type of situation, and I always like to think of these things through supply chains and through value chains. So you look at where the cocoa comes from, where it eventually goes, how it gets processed into food and ultimately consumed. I think that whole supply chain and the underlying value chain can basically be run through a stablecoin network. And it's so fast and secure that I think the working capital cycles of these SMEs, that can be accelerated by 10x. Honestly, I think 10x may be a low number. And if you think of a small business where you start accelerating working capital cycles by 10x, all of a sudden that thing spins like a flywheel. And your revenue just grows, I won't say exponentially, but it will grow by a sizable number, because all of a sudden you just generate so much more with the working capital you have. You don't need to wait for funds to clear. You don't need to get expensive trade finance instruments. You can build a contract around it. The remittance of that value is instantly recognizable, and everybody can see it. It's radical transparency in a sense. So I think for the African economy, and specifically the SMEs, it's got a huge opportunity.
Mm-hmm. I was wondering how many organizations are paying either their people through crypto, or are there progressive organizations that you're seeing in South Africa or globally that are leading the way in terms of crypto? A
lot of the crypto firms, maybe we should exclude those, offer to pay in crypto, but that's a bit self-serving. I don't see it enough. I had a very interesting discussion the other day with a friend who had a DIY factory, basically make roof sealants, etc. And a lot of their workforce is from Zimbabwe. I said, well, think about this, because if you can pay these guys a stable, and they can just find a way to remit that, to their families in Zimbabwe, that's a winner. But I don't think it's as adopted as it could be. I think it could be a differentiator. I think now you need to almost take your finance hat off and put your HR hat on, saying, but could this be a way where I can attract that I could attract? I think it is. We all Africans, we have this famous saying that Africa is not a country. It's a federation. And migrant labor moves in one direction, but value flows in the opposite direction, because all these folks send money home, they send it to their families. But I'm critical of those rails. I think they're very expensive, and I think the fees are massive. And the thing is, you still have a dirty basis of paper outlet on the other side. So that's where the whole thing falls down. And it is happening, but if we can get the whole thing digitized, I think it becomes far less painful. I think it becomes far more adopted, and I think it will just make life easier for everybody. Mobile penetration is not our issue at all. I had another talk about a month ago where I thought, okay, let me just look up these numbers. African mobile penetration is very close to 100%, if not slightly more. South Africa, I think we're about 20%. So that's not the issue. Everybody's got a phone. So the ability to transact digitally from a technology perspective is there. It's now a case of just bringing the technology into it.
And I mean, do you see that organizations, I mean, if I think about Trump, I think they called him the crypto president. I read somewhere that he took donations in crypto. I mean, yeah. I'd like to know how much he received in crypto. Was it all from Musk?
I don't think so. No, I think from what I've read, and so this is public information, is that I think a lot of the crypto firms, I'm not sure we did much because we now technically outside of the US, but a lot of the US-based crypto firms funded in crypto. Some people frown on that. I'm saying, well, maybe that's exactly the way it should be done. Again, it's traceable. If you've got his wallet or his Trump organization's wallet, you can actually see what comes in. Whereas with fiat, it may not necessarily be possible. So, yeah, he has moved the needle in that. We still have some way to go, yes. And whether you like him or loathe him, that's beside the point. He does what he says he's going to do. And he's what he calls his genius bill. That is a very Trump term, but his genius bill has now gone through the Congress, and that's obviously about stablecoin adoption. So what he said he'll set in motion, he has set in motion. I think that will move the needle, and there's a huge shift in the US. The US had a real danger of falling behind the rest of the world under the previous administration. We can argue that all day, but it's not about politics. It's about the industry itself and where it was and where it's going now. So I think he's moved that forward, and if you move the US economy forward, a lot of the world will follow. So in that sense, definitely a good impetus for our industry.
I mean, I can't help but think he moved from the dollar essentially to oil. And it seems like he's moving from oil to crypto.
Yeah, what is called the black gold. He's very protective of the black gold. So, now whether he will do both, I think he'll do a bit of both. I don't think he'll necessarily migrate from one into the other. Mm-hmm. But listen, again, where we stand on this environmentally is maybe beside the point. But what the US has done really well, and I think he will continue doing, is they've become energy independent mostly, and much less dependent on the Irans of this world, which now again sees a geopolitical shift. Mm-hmm. I'm not a big fan of, I think, a lot of the fracking and stuff that happens, but that's beside the point. It's about the energy independence, because however you get it, whether we like it or not, the US is mostly energy independent now, and that shifts the needle again. So in that sense, you can get that right, and you can get the US on the forefront of crypto, back on the forefront of crypto. I think that again will move them forward. So those can be two big decisive shifts.
And the shift with AI, I mean, you talked about the intersection between AI and crypto. What does that future look like for you?
That now I'm purely speculating. This is how I think it will happen, but I look at something like AI agents, and I think that is vastly underestimated. I use GPT more for research purposes, preparing for podcasts like this, devising a strategy for my CEO in terms of what we want to do in South Africa, and it's brilliant at that. But I think we should all do this. I always say to people, send your first word. I think we should all go watch a video on how to script your own AI agent. It's basically not that difficult. Where I'm going with it, once you got the AI agent and this starts doing stuff for you, if you can securely link it to some of your crypto wallets and say, well, the other AI agent also deals in crypto, and I think this is where this is going. If you can get these two AI agents that's obviously fully permissioned, you know exactly what's going on, you set the parameters, etc. They can start transacting on your behalf without much interference. And that's the whole idea behind an AI agent, where you just automate a lot of the stuff that you don't really want to do. And you can get on with life, whatever that is. that for me is the intersection between the two. And I think I'm a big Stephen Kotler fan, and he talks a lot about the intersections in life. And I think you look at the intersections of these two emerging technologies, that's when it becomes really interesting. And I think that's when we're going to make shifts forward.
No, we should do a masterclass in setting up an AI agent.
We should.
My girlfriend's 11-year-old son and I set up one about a week ago.
Oh yeah.
He was definitely more involved than I was. And then one of my colleagues at the office here also set one up, and so set up a dashboard. So I agree with you. You know, if you want to get involved in this, you've got to. And it wasn't. It had some sticking points, but it's easier than what you think. So I've linked my emails, my calendars now. So I've linked a whole lot of different other technologies to my ChatGPT.
Absolutely, and that's brilliant. I would actually love to see how that works. But I think it will have issues, because all emerging technologies have issues. We'll need to look at the security layers behind this as well. There will be fraud happening on these things. We have to be, like we'll say in South Africa, we have to be wakker about this. We just need to make sure that we don't give information away that we shouldn't give away. But that's all part of the process. These mistakes are all part of the process. But yeah, I think this can definitely evolve into something that can put humanity forward.
Yeah. So, I mean, you mentioned earlier that you felt that crypto was a little bit weird, and if someone tells you can't do something, then you run towards it. So, I mean, what was it when the penny dropped, though? What were the things that you saw, or is that sort of mindset, do you think, more needed in today's disruptive digital world?
Yeah, I think it's very important in life to be curious. You don't need to be intelligent to be curious. But I think you just need to see where things lead. I think, whether you call it synchronicities, whether you call it luck, whether you call it whatever, I think it's just important to follow through on these things and see where they lead. Go a couple of iterations into a concept. Okay, so this doesn't work. Does it work this way? I had a CEO always said to me, ask at least 5 questions that goes deeper before you just say something is not for you. And I think that was very good advice. I think where the penny drops when I realized you can add credit cards to this, where you can build a payment trail that if I pay you with a credit card in crypto, there's machinery in the background that basically converts that crypto into the preferred medium of exchange for the merchant. And I use that term specifically because at the moment that's fiat. I think ultimately that will become a form of crypto. But if you can build that machinery as smooth as possible, where these guys get their money, because that's a bit people want. They want to get their money sooner. Where in the old days there was a time when credit cards would take 2 weeks to clear. I mean, you can't operate like that. I know it's much faster now. I think guys like Yoko has done a great job in terms of accelerating that. But when I saw that happen, and I actually have a Binance credit card, we were issued with them for staff members in South Africa just to see how they work. They work really well. But you basically structure your Binance wallet in a way where I say, liquidate the following 5 tokens for me in the following order. Then you don't all of a sudden dip into your Bitcoin wallet and you actually wanted to preserve that somewhere. So very logically set up. And that's when you realize, but this is really possible. And then working with our friends at Crypto Badger, when we did that app collaboration where you can buy groceries at Pick and Pay using the QR code. I'm like, this is so easy. And it works really well. So what happens on the other side now, I always need to change perspective and say, but why does this work for Pick and Pay? It works for Pick and Pay because they get their money quite quickly. That settlement into their bank account happens, I think, T+1, maybe T+2. But I think at the moment it's T+1. So why would they not do it?
What does that mean? 3+1?
Sorry, T+1. So your moment of trade plus 1 day.
Okay. And typically, how long is it normally?
Well, there was a time with credit cards where it took 2 weeks. I know it's much faster now, but I also know it's not immediate. Yeah. And say T+1, we can bring that way down. Remember, we're in the early stages of this. Yeah. We can bring it way down. Again, working with our friends at 5 West, they've built rails where you get paid almost immediately. And I've tested their network. And yeah, I mean, it pays you out almost immediately. You change stablecoin into Rand and it's in your bank account 5 minutes later. And, it's like, I'm in crypto world. When I saw that, I said to the owner, I said, oh, my, this is amazing. The money's in my account 5 minutes later. So that does not happen. I mean, the South African banking system, if it's not bank A to bank A, takes a day to clear. This is fine. It's like, so again, I mean, you can't immediately redeploy that capital, but I still need to meet a business owner who wouldn't like to see the money in his account 5 minutes later. There's a big moment there. So that stuff really makes you believe it.
Obviously, the impact on crypto and blockchain. I mean, we were speaking earlier about how it works in the property industry already. I mean, is there other use cases, or is property a good case example of how crypto can work better?
Let me bring cars into this. So you look at what South Africa, we've got the e-native system, which I think works well. I think that is a very good platform that can be linked into an NFT, whereas you can take your VIN number and your chassis number, put that onto a layer of the blockchain, and with the right conditions, you can now sell a car. Value moves this way, the ownership moves that way. That's something that can be improved on, and that's something that's maybe a slightly higher velocity than property finance and trading. But I think that's a good example of things move. Now you can do that. You can make it smaller. You can fragment it. You can make it smaller and smaller. You can start using things like diamonds. I know De Beers have used NFTs and blockchain for some of their diamonds for quite a while. If I say small, it's not necessarily small in value. It could be much more than a car. But that's a good example of how something that's truly scarce can be put on a blockchain and traded. So yes, diamonds can be split up, etc., etc. Then you need to do something on the blockchain on that. But I think the opportunities are endless if you think the art of the possible. I think that the NFT arena was basically a bit of a fad in the previous cycle. But if you look at the underlying technology and how it capture what we call real world assets, it's tremendous. I think there's so much we can do.
And I mean, NFTs took a bit of a jab. My dad does some paintings, and I think he had a lot of people bidding for. He got very excited, I must just tell you.
Yeah.
But, so, I mean, that was a bit of a fad, like you said. I mean, where's the new opportunities with crypto and NFTs?
I think with NFTs, we need to kind of bring it back a bit. I think the emphasis has shifted now very much to stable coins. The current cycle is very much about stable coins in Africa. We're also seeing the formation of Bitcoin treasuries, which seems to be a big theme of the current cycle. The NFT thing needs to come back, Ralph, but it's not done so to the extent that I would like to see it. I don't know what will drive that wave, to be honest, but the potential is definitely still there.
And you mentioned Bitcoin treasuries. What actually are they?
I think let's take the most prominent one, which is currently called Strategy. It used to be MicroStrategy, run by a guy called Michael Saylor. I must be honest, I can do about 20 minutes of Michael Saylor, then I need to take a break. But he's very passionate and very intense about it. But it's basically a corporate vehicle that issues a mix of debt and equity at very low yields because the system is flooded, buying Bitcoin, and just holding it on his balance sheet, where basically the price delta, the difference between Bitcoin's price appreciation and what he finances that is basically what we used to call a free carry for the finance, for the folks owning a stock, And he says he just couldn't believe it when he could issue a convertible instrument at less than 1%, and he could buy crypto with it. He says this is like a hack. It's like a glitch in the system, And he keeps doing it. Now, I think we do need to be careful. I'm the first one to say that, in crypto, what goes up comes down. It generally goes up, but crypto has a very clear bear market. And you just need to know what the ceiling level of every company's Bitcoin holdings are. I think Saylor's at some stage strategy was at about $70,000. Every time Bitcoin, that level goes up. Now he has a debt equity mix in his business, so we need to look at that as well. You don't need to repay equity perpetual, but you'll need to pay some of that debt if he gets closer to that level. But again, it's algorithmic. I think if you look at the investment cycles around Bitcoin, basically, if you buy sorry, this is not financial advice, but my observation that if you were to buy Bitcoin 18 months before the halving and you sell it or Tether 18 months after the Bitcoin halving, you've basically got 1 year left in a 4-year cycle. So you hold Tether for that remaining 12 months, and then you do the whole thing again. For everybody who listens to this, do yourself a favor, go to ChatGPT, say, model this for me. I was absolutely astounded by the returns you get. So it's not financial advice, but this is the premise on which these guys do it. I'm not saying I don't think Michael Saylor will go into Tether. I think he's all Bitcoin. But I think some of the other corporate treasuries could do something like that. When you feel the cycle is turning, you can just maybe not sell everything. Don't have a binary way of looking at things, but maybe sell 50% of your Bitcoin for Tether, ride the cycle a bit, and then you do the whole thing again. That could give you balance sheet flexibility that I think is not known in the corporate world at the moment. And I think it's something people should look at.
And so where are we in the cycle at the moment?
That 18 months post-halving ends in October. It's a very good question, because not only is it about that cycle, it's also about macroeconomics and the liquidity cycle. And the liquidity cycle is slightly lagging at the moment. So I personally think, and again, not financial advice, but I think we're going to extend slightly into next year. But we are deep into the cycle. So we've not seen that pure parabolic phase that we've seen in other cycles. I think we may still see that, but that's still to come. Which means, I think we've seen good returns. If you bought Bitcoin 18 months before the halving, it was sloshing around $14,000.
Yeah.
I mean, today we are around 108,000. That alone would be a great return. And I think it's still got a long way to go. Now, maybe it comes down, wherever it goes, maybe it comes down to, I think, about $70,000. I mean, you're and you do the whole thing again. I think what we remind people is you don't need to buy a whole Bitcoin. There's this thing where you can only buy one Bitcoin at a time. No, it's not. It's almost infinitely divisible, where the smallest unit is called a Satoshi, and that's still a couple of cents in South Africa. So it's infinitely divisible in that sense, where you can still buy small fractions of it. So it's not too late. There's still a lot that can be done around that. So that's the cycle's got a long way to go. But this is definitely one of the trends in the cycle.
So the cycle's still got 5-6 months to go. I read somewhere today that Standard Chartered predicts Bitcoin to be worth $200,000 by the end of the year. A Mexican billionaire said it's going to $1 million. I mean, these are crazy amounts.
Crazy numbers. But again, so let's take the Standard Chartered number, because I think why I like that number is I think the institution does a lot of research on blockchain that I don't see a lot of the other institutions do. Standard Chartered, for me, leads the way when it comes to blockchain research. So I'm not saying that's the number, but I definitely put some weight to it. But let's take the 200,000 number. So, Ralph, if you came from $15,000 to 200,000, I'm very sorry, but there are very few asset classes, if not stocks, if not units, generally that give you that return. Yeah. So I'm not saying it's the best asset out there, and yes, there are risks attached to it. But if you're an asset manager, I think you should pay attention to this. I think it could be a differentiator.
I mean, one of the other things that you talk around is trading money. So let's say I'm a conservative investor and I'm looking to invest in index funds to track the market. And I know that sending money internationally is, in South Africa, very, very expensive with traditional banks, 3 to 6%. How much of a weighting or a cost of conversion is that typically with crypto?
So I think two comments there. Binance's standard charge is 0.1% from one token into another, to talk about exchange control. But whether you like exchange control or not, I take it as a given. But I think there's a fintech solution behind this, where exchange control is about the recording of value going across border. And why can't that be recorded on a blockchain? Why can't your yearly allowance be recorded on a blockchain? All those things, this is what fintech does. This is what fintech solves. So I think the folks at the SARB is looking at this in earnest. I know they've got tech people looking at the way we can automate this and the way we can make it better. If we can make this I always want to say friction-free or frictionless. We can entice people to use the right rails. Over time, maybe exchange rails can disappear. Maybe this could be the solution for it.
So it's quicker and it's cheaper, or
both?
I mean, I read it was a tweet today. I think it was from your CEO saying the future is crypto.
I think it's future. Yeah. Did you say our CEO?
Yeah.
Well, look where he is at the moment. It's fascinating. He's in the Kingdom of Bhutan. He met with the King of Bhutan yesterday, and one of if you track this journey of him, he's actually doing the entire journey in crypto. So he's paying everything with crypto, and it's working. So the future is crypto. If you look at that, it is what I like to call a bubble experiment. Yeah, I think the Kingdom of Bhutan has adopted this very well, and not all economists do it yet, but it is a very good example of what can be done. It's a very, very good test case of how you could do an entire trip like this in crypto.
Could be good fun. But I mean, what does it mean to the average person to get into crypto? I think that they said the internet was a great revolution, and the Bezoses of the world made billions, and they're now saying crypto and AI is the next giant leaps. How can people take advantage of this? You spoke a little bit, you said earlier, the skills you learned from traditional banking, you've more or less used them in this crypto world.
I think, especially the economic background and macroeconomic background. But we also need to look at what happens to our money. And, this is where things become quite libertarian. But if you look at what happened in COVID and you look at what happened to money supplies, we basically, the moment you increase money supply, like a lot of governments have, I'm sorry to say it, but you're socializing losses or privatizing profits. Because that's all you do. The moment you just put more water in the bath, it's just more water in the bath. There's no scarcity. The scarcity is gone. That thing, socializing losses and privatizing profits, how many people all of a sudden became billionaires out of COVID? But, ultimately, all that money just funnels into very few hands. And that, I think there's very little argument against that, where I think a lot of people saw their savings getting debased. I mean, if the US go to an inflation rate of 7.5%, imagine where other countries are. So all of a sudden, you're 7.5% poorer without having done anything. And a lot of people get very wealthy. So, yeah, that type of thing, I think, is definitely something we should all look out for. And we all need some way to preserve our wealth. I think it's crypto. I think you need to look at something like gold. Gold has done tremendously well, but not as well as crypto. You need to start finding ways to protect yourself against that. I think the Fab 7 in the US, there's a lot of value there, and I think their Tesla will, over the long term, I think they do have the best AI, and I think they will outperform some of the others. I think the way Elon moves technology forward, just look at the robo taxis this week. Yeah, I mean, I know there's always issues, and people like to point out those issues, but having a look at that, I think there's definitely a lot of ways we can protect ourselves, use it to protect our hard-earned money, and create some wealth that we can pass on to future generations.
Hannes, it was amazing to talk to you. We've got to do this again, but what an interesting conversation. Thanks so much for your time, and thanks for joining us.
Thank you very much, Ralph. Appreciate your time.
Sure.